Hello everyone, Virgo Triad here. It is March 15th, 2018, and I hope everybody is having a great end to their week. Soon we're coming up on Friday and we'll have a good weekend coming up here that we'll be able to maybe relax a little bit and get some of the junk off of our minds. I certainly hope that's the case for all of you. Okay, so I wanted to sit here for a few minutes and go over a couple of things with you guys with regards to the show that was on that Miss LaJune and Harvey Dent um, somewhat spoke to one another. Okay, and I wasn't actually even going to address this scenario, but when I got up this morning, I had a full inbox, and it was basically people. Saying, hey, did you watch the show? No, I didn't watch the show. Quite frankly, um, I really didn't see a need to watch the show, and I really wasn't going to address anything else that pertained to Miss LaJune or Mr. Dent because I simply find them to be rather irrelevant at this point. And let me explain to you the reason why. The reason why I find them irrelevant and the reason why I never responded to Miss LaJune's request with regards to me being on her show is because they've been debunked, both of them, several times. Now, Miss LaJune has been debunked very recently, just as soon as Tuesday, as a matter of fact. Everybody knows that the TDA calculator doesn't actually work for the purpose that just 2 days ago or 3 days ago, she claimed that it did. Um, in the case that she didn't know, okay, that the TDA calculator doesn't actually pull bonds, that it's actually just a calculator that has parameters, and you really don't even have to use a bond number, but it certainly doesn't show your bond amounts or that anything's attached to you whatsoever. I mean, this has been debunked by a lot of people. I debunked it myself in October. I re-uploaded the video for you to see just a couple days ago. It's been debunked by everybody, including Harvey Dent, okay, by the way. But regardless, I have to look at that type of scenario and say, okay, one of two things is happening here. Either number one, April LaJune actually is unaware and really did not know that the calculator doesn't actually work for the purpose that she was trying to show it as proof that you have TDA accounts within Treasury Direct, okay? And if that's the case, then I would have to say that a person that doesn't know something that simple, that can't figure out that type of calculator, that is really something that is all over the place now, mortgages, car loans, it's an amortization calculator. And if you don't know that piece of financial information, you really probably shouldn't have your hands, certainly in anything as serious as a secured party creditor UCC1 statement can actually become, should something be done wrong. So that's concerning. But on the other hand, it's like I said, it's either that she doesn't know, okay, or she does know, which is even worse, because if she does know, then that simply means that she's using it as proof for people she thought maybe wouldn't know and attempting to actually mislead you by making you think that this is something that you can use to locate your bonds. And just by going through the comments of that video section, which I just did this morning, you can actually see that there's even more people than there were when I uploaded the video on Tuesday that actually did fall into that category. They really had no idea that that calculator couldn't be used in the manner that she claimed, so therefore they took it as verifiable proof. And I'm sorry, but that's just sad because it's been debunked many, many times, and the fact that that was used is either something that entails deceit, or it's something that entails not being educated in the area of finance, because that is a calculator that's very, very simple to figure out, okay? All right, so that being said, that brings up two things. Number one, I don't roll in the mud with people who falsify things. I also don't plan to go in and interview on somebody else's channel where they're going to use tactics because they've been proven to either be dishonest or uneducated in this area and don't want to be discredited. They're going to continue to do things like what you saw on this show, cutting people off, not allowing other people to speak, muting when they don't like what's being said, continuing to motor on and ramble in order to avoid people from actually speaking, which is exactly what happens. You can see it all over certain newscasts. Just watch, any of the shows like Bill O'Reilly or any of those that, and I'm not just speaking on the, not just Fox, but any of the other channels, CNN, all of these people, Anderson Cooper, they do exactly the same thing. It's their show, they cut you off, they mute you, they skew it, whatever. So, no, I'm not going to fall prey to that. Number two, there's absolutely no reason in the world why April LaJune should want to speak to me. If she wants to talk to me, she's welcome to send me an email. I will respond back to a simple email. Okay, so that being said, I am not out for any purpose other than to assist you guys to not fall into a pitfall. That should be proven to you. Number one, I'm not charging anything. Number two, I'm not making anything. Number three, everything I'm providing to you is verifiable source, and I have absolutely no reason to be wasting my time providing it to you unless the simple fact is that I give a darn. And I do, because this sort of thing, what April LaJune is doing, is scamming people, and that infuriates me. So that will keep me going. It will keep me, making statements and proving them wrong, because this is a downright dirty, nasty, evil lie that's being told, and it's being told by more than Miss LaJune. However, we're going to deal with this right now because, once again, we already had the scenario with the calculator that I just talked about. We had another scenario with a Google Wallet that you guys really need to pay attention to, and that is that, number one, you absolutely 100% cannot put in an ACH in an ACH system, whether it's Google Wallet, Amazon, or anyone else. An account number that is going to come back verified as an account number. The only thing that's being verified is the actual routing number. The reason for this is because people go all day long into banks and open up checking and savings accounts. Every single second of the day, numerous thousands of people are opening up checking and savings accounts, money market accounts. They all have account numbers, and you can draw off of all of them to places like Amazon, Google Wallet, so on and so forth. All right, you would have to have a system that would keep real-time data, and it would have to update literally every millisecond in order to ensure that those accounts are verifiable. And I'm talking about the accounts that you get from a regular bank. That simply doesn't happen. It isn't the way the system works. What happens is you are able to verify based on the actual routing number. The routing number is what's verified through Google Wallet. The routing number is what's verified through Amazon. Now, in some cases, and this is what I was told by the person at Amazon that I spoke to, they actually can see when an account is a bad account, and this is how. When you get an account that says it's not valid, it's for two different reasons. And again, they're parameters or previous history. The first one is previous history. That means it's an account that someone else already has on file. They can only be had on one actual account, or it's an account that was used on file that was a derogatory NSF check. Now, those are the only two scenarios, two situations with as far as history. Secondly, if the account number doesn't have enough digits, or if the account number has way too many digits. Other than that, if you have an accurate account number, or routing number rather, if you have a routing number, whether it's Federal Reserve, whether it's PCN Bank, it does not matter, Bank of America, as long as the routing number checks out, they're going to give you the benefit of the doubt until you get a kickback or a reversal or a non-sufficient funds charge from that account. The reason that they have the verifiable deposits is for the purpose of verifying the account belongs to you. So know that, and if you do not trust me and what I'm saying with regards to Google Wallet not being able to prove that those accounts are that the account number is verified, pick up the phone and call customer service because they will explain it to you. All right, so that takes care of those two. which leads me to my final statement with regards to why I would not accept an interview with April LaJune. All right, so the bottom line here is that we have 2 instances, at least, that she has been proven to use information that is false in order to try to prove accounts exist. Now, that's not 1 shot, that's 2 shots. So once again, she's either not educated enough to understand the way that the financial system works in order to understand that those 2 things would not actually be proof, which again makes you wonder what she's got her hands in. Is it safe? Your personal information, filling out information for secured party creditor, and a UCC1 filing, which can get you into a lot of trouble if it's done inaccurately. Okay, that's 1. 2, she already knows that that's not viable proof, and she's using it for the purpose of tricking you into believing that the accounts exist, into believing that she can provide you this proof. All right, so what that brings me to is once somebody has already lied more than once, that's not a credible source. It's not somebody I want to deal with. I certainly don't want to have a discussion with them, and there is absolutely no reason to debate them. If I'm going to debate somebody, I'm going to make damn sure that that person I'm debating is an honest party. And in this case, so far, what's been shown is that April is not honest. Okay, I have to assume that April at her age is more aware of the financial industry and how it works than what her claims would be with regards to the TDA calculator and the Google Wallet. All right, I have to assume that she is doing it for the purpose of misleading people, because based on the fact that she's lived life and she's paid bills, I'm sure, through the ACH system, and I am sure she has used a amortization calculator in the past, my thoughts would be, and I might be wrong, but I have to really look at it and say, it appears to me that she was attempting to try to deceive you. Okay, so on to the next thing. We are now going to be talking about secured party creditor, what it means to you, what it entails, how it would help or not help you with regards to what April is selling. We're going to talk about the 1099-C that she put up, what a 1099-C is, and how you receive a 1099-C. We're going to talk about accepted for value, and we are going to go over many of the things that were said within this actual broadcast that April and Harvey did. Okay, so the first thing we're going to actually take a look at here is the first piece of proof that was provided by April in her last broadcast. Now, you will notice that if you take a look here, you will see that the information that is drafted up here is actually a disclaimer stating that this document is issued as a year 2016 tax statement for a 1099 information return. And it goes on to provide you with all of the different miscellaneous forms that would need to be filed in order for you as the consumer to be aware of the fact that this is something you absolutely have to file with your taxes. Okay, so the reason that I'm mentioning that is because in the actual broadcast, April makes a statement that this is a receipt that comes back from the actual creditor after the A4V has been done. That this is something that is sent by the IRS to the creditor, and the creditor sends you a copy. In this case, the creditor being Wells Fargo Bank. Now, I want to make sure everyone is aware of this. Okay, a 1099-C is not something that is done or provided by the IRS. A 1099-C is done by the creditor. So in this case, this would not have come back from the IRS and gone to the creditor and then to the actual client. What this was coming from Wells Fargo to the client in order for it to be filed on the client's tax returns as income. Now I'm going to move down to the next screenshot here. Okay, and here we are at the bottom portion of the actual 1099-C. Now, keep in mind what I just got through saying to you, okay? A 1099-C is filed by a creditor. It is not something that would have been provided by the IRS. It is something that is done via the actual creditor. In this case, the creditor being Wells Fargo. All right, I'm going to go over each line item because it's actually extremely important that you understand all of the line items so that you can follow me here. For those of you that have received a 1099-C in the past, you're going to know already what I'm telling you is 100% accurate. For those of you that haven't, this is very important information for you to know. All right, so over here we have the year of the filing, which is 2016. You have that it's a 1099-C. You have that it says cancellation of debt, the actual account number, what the actual item was, which was a credit card with the last 4 digits here, ending in 3900, the account number. Box 1. Now, remember this, okay? When you get a 1099, there's all these boxes. When you get a W-2, there's all these boxes. Those things don't come from the IRS. Those things come from either your employer or they come from someone who has provided you with some form of income that did not get taxed at the time. This is no different than that. This is exactly like a regular 1099, only the C means something different, and I'm about ready to explain that to you. But keeping in mind, this is from the actual creditor. It is not from the IRS, okay? Box number 1 says the date of identifiable event was December 31st, 2016. That means that that is the date that they have done the actual printing out of this and are submitting it. Generally, it's done always at the last minute because they have until the end of January to get these items to you so that you can file your taxes, have enough time to file your taxes. Their deadlines are almost everybody's deadline is the end of January. So once again, this is coming from Wells Fargo, not coming from the IRS. Box number 2, amount of debt discharged. This is the amount of the debt that is discharged. Box number 4, debt description. It was a credit card. Box number 5, this is important, says borrower was personally liable for repayment of debt. Okay, the reason that this is important is because of box number 6. Box number 6 is identifiable event code. There are several, A through I, all right? And I will go over each one of those with you because this identifiable event code tells us how this debt was discharged. Okay, I'm going to go ahead and pull up the IRS article so that you can actually see with your own eyes that this indeed was discharged by the creditor because of a settlement. Okay, this information is courtesy of the IRS. I'm going to go ahead and link this to the description of this video. All right, so you can see that Form 1099-C is what we're actually taking a look at. And it's applicable with regards to those that can file this information. And the first thing is the federal government agencies. And the reason why is because when you have a discharge, for example, of a student loan or a forgiveness of a student loan, which happens quite frequently with people like nurses and teachers, where they forgive a portion of your student loan, in that case, a 1099-C does have to get filed. So, of course, federal government agencies do it. A financial institution, so we're talking about Wells Fargo, Bank of America, U.S. Bank, and so on. A credit union, once again, we're talking about Hughes Credit Union, you know, all the different credit unions that I can't even remember some of the names at this point, but the different credit unions, they all have access to the 1099-C because they also do settlements. They also do foreclosures and repos, etc. Any organization, a significant trade or business of which is a lending institute, meaning that this is not something that comes from the IRS. All right, this is something that comes from a financial institute or a creditor that deals in lending money. All right, identifiable event codes is what we're going to be looking at here, folks. And I'm going to go ahead and blow this up so it's a little bit easier for us to read. All right, so we're just going to go straight down here and we're going to take a look at some of these because you're going to see how this 1099-C actually works by looking at these. This 1099-C works like this. You have different ways that debts can be discharged, all right? Unfortunately, none of these ways have anything to do with accepted for value. That system simply is something that does not work at all. That is something that has been proven over and over again. It is something that is on the FBI website to look out for. It is on the IRS. As a matter of fact, they have done an entire section that is related to securities and accepted for value, fictitious paperwork and documents that are filed, and what happens if you continue to file those presentments. Okay, so once again, we can go back over that if you want to at another time, but you can also look those things up for yourself and you will see that there are warnings all over the place. So these are the reasons why a 1099-C would be used. Code A, bankruptcy. Code A is used to identify canceled debt as a result of a Title 11 bankruptcy. Okay. Code B, other judicial debt relief, which a lot of times will occur in a scenario where a judge finds a debt to be erroneous in nature. So, for example, predatory lending, that sort of thing. Code B is used to identify cancellation of debt as a result of receivership, foreclosure, or similar federal or state court proceedings other than bankruptcy. Okay, Code C, statute of limitations or expiration of deficiency period. Listen, folks, you may not understand what that means, but I'm about to tell you. If you recall, back in one of my videos a few months ago, I was explaining to you that every single state of every single county of every single state in this nation has what's called a statute of limitations with regards to debt collection. I told you to make sure that if you have an actual debt that is being collected upon, that entity that's attempting to try to collect it is within their statute of limitations, because it differs based upon your county and your state. So statute of limitations for a Code C means this. The very last time around, the last year that they have. So for example, 7 years would be like the state of California. They have 7 years to collect. It is now the 7th year. In the event that you do not file that 1099-C, you absolutely 100% as the creditor are not getting any of your credits for write-offs on your report, on your IRS report when you go to do your taxes. So that is a Code C on a 1099-C because the statute of limitations is up and they are having to file it themselves with the IRS. So you get a copy of it, which is the case with all of these. This is really does not have anything to do with the actual client themselves. In reality, this is simply something that the actual financial institute is responsible for doing. They are responsible for notifying the IRS in several different cases anytime that there is an occurrence with a debt that is different than the norm. All right. So because of course they use those things as write-offs, charge-offs, etc. Okay, so that's Code C. Code C is used to identify cancellation of a debt when the statute of limitations for collecting the debt expires. All right, here we go. Code D, foreclosure election. A lot of people misunderstand about foreclosures and vehicle repossessions, and I want to go ahead and talk to you about that for a second. All right, One of the reasons why I'm very leery with regards to anybody who has a package that claims anything having to do with A4V or mortgage debt relief is for this because of this, okay? You have a mortgage, and your mortgage is something that you run into a bad scenario and you can't pay that mortgage payment every month. You've used up your 3 months that they provide to you. You've used all the stall tactics and you've even tried to get some assistance, but they're just not going for it. Okay. In the event that they repossess that home or you abandon that home, either direction, it doesn't relieve you from the responsibility. Now, right or wrong, it doesn't matter how we feel about that, because the simple fact is there's still a lien holder on that promissory note, and there's no guarantee in their mind. There's no guarantee that when they resell it, they're going to make the money back that is lost because you stopped making payments. You are still legally responsible for the remainder of that amount after the actual house is auctioned back off, plus the fees that it cost them to repossess it, get it ready for resale, and selling it on the auction. All right, so whatever that remaining balance is right there, you still owe. Okay. Now, a lot of people feel that when you abandon a home for foreclosure, you don't owe it anymore because they've got the house back and that was the collateral. That's not true. So in this case, they would be filing a 1099-C in the event that that debt, that part of the debt, was forgiven for foreclosure election, meaning that you spoke to them on the phone and you said, okay, I'll voluntarily leave. I can't make these payments anymore on this home. I'm going to voluntarily leave. Can we please work something out to where I'm not being damaged if the house sells for a certain amount or what have you? And they agree to that. And believe it or not, there are a lot of scenarios that they will actually agree to it because they're better off getting something than nothing. So if you're providing them with an offer for a foreclosure settlement, 9 times out of 10, if it's over their threshold, they will accept it by company policy. Just a little hint there for people who want to deal with that scenario. Okay, so Code D is used to identify cancellation of a debt when a creditor elects foreclosure remedies. Okay, Code E, debt relief from probate or similar proceeding. You're dealing with a situation here where someone has passed away. The creditor is willing to let it go at what the probate is able to pay out because they simply can't collect any more from the relatives because they don't have enough assets and there isn't any more life insurance. All right, that's Code E. Code E is used to identify canceling of debt from probate, court, or similar legal proceeding. Code F is by agreement, all right, which means something to the scenario of you've heard of 90 days same as cash. Okay, meaning that if you pay it, if you pay something off within 90 days, you get it for same as cash, 0% interest. But when you originally sign up for it, you are responsible for 10% interest if it goes beyond that 90 days. You pay it off within 90 days, and there is a small amount that's left over in fees or whatever that has to get off of the books. They're responsible for letting IRS know that it went $90 over or whatever, but you paid it off. It's relieved and agreed to by agreement. Code G, decision or policy to discontinue collection. Now, interestingly enough, this has to do with the creditor's established business practices. A Code G can be used in many different scenarios. 2 of them I'm going to mention here. 1 relieves you from the actual debt as long as you get the statement of settlement. Second one does not relieve you from the debt at all. As I said, a 1099-C is not proof that you've been relieved from a debt at all. A 1099-C is only for the purpose of the creditor notifying the IRS of a change that's happening with that specific lien. Okay, let me go into detail here. On a Code G, if it is the business practice of the creditor that anyone who calls up and is in collection that offers 70% or more of a settlement, they automatically take it. That is considered a settlement. The reason the 1099-C would come into effect is because the remaining amount between what you paid and what the debt was is considered taxable income for you because you did not have to pay it. Okay? That is debt forgiveness because they're forgiving you of a portion of the debt, but they're not going to take the liability of the remainder of it. They've already taken a liability of an amount. They're not going to take the tax liability too. Whereas if you had paid the full amount, there would be no need for a 1099-C. Okay? A settlement, you get a letter. It says the debt's been settled. It's not going to stop you from getting a 1099-C. All right? But it is proof that the debt has been settled. You know when a debt's been settled because either yourself, your attorney, or your accountant is settling it for you. That is number one in the most common scenario. Code G number 2. Creditors will do things of this sort. They will bulk together all kinds of different loans that are in collection for specific reasons and put them to the side for a specific period of time. It's called the testing of a portfolio. The reason that they do this is because if they're not close to the time frame that that the statute is going to run out. Let's say that I'll just give you an example, it's easier to explain. Let's say that you have a debt. You have a debt with Bank of America. Bank of America says, okay, you've got a debt with us that's in collections, but for the last 3 years, we haven't been able to collect it. Why? Because you're on disability. Disability is non-garnishment. They're not able to garnish disability at all right? So what they do, because it's only a 3-year-old debt, they put it to the side along with all the others that look similar in the portfolio as yours. Maybe all of these bulk together all have people that are on disability that they can't collect from. So what they'll do is they will put it aside for a period of time, usually a year, because each year, disability takes a look at all of the people that are on disability and has to review it and make a redetermination as to whether you're going to remain on disability or not. Now, if you've got 10,000 people in that portfolio, some of them are going to drop off and go back to work because not everybody's on permanent disability, which means they can start collecting and garnishing from those people again. In that case, what they do is they take that entire portfolio, they send 1099-Cs to every single one of the clients with the letter G as the actual intent, okay? They're letting the IRS know, hey, these are still ours. The actual person that is owing it is still responsible for it, but we are filing a 1099-C because we are letting you know that we're setting these debts aside in order to ensure that we can maybe collect from them the following year and we do not lose our status of collectability or charge off and write off should they not be collectible. In that case, you're still on the hook. Remember, Code G tells you that the decision has to do with a policy of the creditor to discontinue collection. All right? It does not make it ironclad that you are no longer responsible for that debt. Okay, so let me take you back here to take a look at the actual statement again. Okay. Okay, so remember, box 5, borrower was personally liable for payment of debt. Box 6, identifiable event code G. I can already tell you that the amount of the debt discharged had to do with a settlement. It proves nothing having to do with accepted for value. There are only a few scenarios that a 1099-C is established. It always comes from the creditor. It always goes to the IRS. It always has a copy provided to the client, to the person, the debtor, the person who does the owing. And A4V has absolutely nothing to do with it. And here is the big bombshell, you guys. If A4V worked, there would be no need for a 1099-C because there would be no remaining amount to discharge. A4V accepted for value would work by pulling from trust and paying off the amount entirely. There would be no need for a 1099-C to ever be distributed by the creditor, ever. So this is absolutely 100% another falsity. You can look at all of the information that I have in the link below. If anybody gets confused, please feel free to email me or to put it in the comments and I will explain it again. This is not from the IRS. This is going from Wells Fargo to the IRS because this credit card account was settled December of 2016 or somewhere thereabouts. They printed this out as a 1099 with the exact same boxes that you'd find on a 1099-C, which was probably below this. They put an identifiable event code of G because company policy allowed them to accept a settlement. They put in here that the borrower was personally liable for repayment of debt. All right. This is absolutely 100% not an A4V process or any kind of a proof of that because you would not need a 1099-C on a debt that was completely and totally covered. This is only because there was a $10,215 portion that was not covered, that was considered taxable income because of the forgiveness. There are only a few scenarios where a discharge even occurs, and every single one of them is on the A through I statement that is provided by the IRS in the link below the description. I'm going to take you back here because it's important for us to revisit this, guys. The FBI stated way back a few months ago the scams having to do with redemption, straw man, and bond fraud. I'm going to go ahead and read this one more time. The scheme claims that the U.S. government or Treasury Department control bank accounts, often referred to as U.S. Treasury direct accounts, for all U.S. citizens that can be accessed by submitting paperwork with state and federal authorities. Individuals promoting this scam frequently cite various discredited legal theories and may refer to the scheme as redemption, straw man, or what does that say, folks? Acceptance for value. It is extremely important that you start putting the dots together for those of you that haven't already figured this out. Put the dots together. You've been lied to about the calculator. You've been lied to about the Google Wallet proof. Now you've been lied to about what a 1099-C is. And listen, folks, you don't have to take my word for it. Pick up the phone and call a tax preparer. Pick up the phone and call any accountant. Pick up the phone and call anyone well-versed in the tax codes that can explain to you exactly when a 1099-C is put into play. Any 1099 is considered income that is taxable. Any 1099. A 1099-C just happens to be the one that creditors use. Now, April made the claim that this document she had gotten 15 minutes prior to the actual broadcast of the show, and it showed that one of her clients or someone that she knows that helped her, no, I'm sorry, it wasn't one of her clients. Let me correct myself. It was the person who told her about how A4V works. This was his proof showing that, right? Okay. That might absolve April, except for that, I'm sorry, if April doesn't know what a 1099-C is used for in the tax codes, if she does not understand that much about the practice of accounting, because that is accounting, okay? As a business accountant, a 1099-C is what you use if you're a creditor. If you're someone who's lending money, a 1099-C is fairly basic. And all that it is income. It's considered income because of there being a portion of a debt that was forgiven. And with that debt being forgiven for whatever reason, whether it be bankruptcy, foreclosure, repossession, a settlement, whatever the reason is for that actual percentage that was not covered, that uncovered percentage is what is considered taxable income. So no matter how you look at this, it's still not proof. Even if A4V were real, it still wouldn't be proof, because a 1099-C only has to do with an amount that has not been paid, has not been covered, and is still considered taxable income. That's not paying anything off. That's not discharging debt in a way that would suggest that a trust paid it off, okay? And in the case of a G, you might still be on the hook for it if it has a different disclaimer than what that actual piece of proof has. That was used in a settlement. Once again, folks, we are dealing with falsities. And unfortunately, there are a few more. Okay, guys, I'm going to really quickly go into secured party creditor promissory notes and security agreements, UCC1 filings, and why this is not something that is going to work with regards to the A4V process. First of all, the A4V process is proven to be a scam. It states it on the FBI website. It states it within the IRS. The IRS is assessing fees of $5,000 per fine for anyone that files more than one fictitious presentment of an A4V, because A4V in itself is a fictitious statement. All right, so with that, now, let me just say that April has made claims that within her package that states that it is a TDA package, that secured party creditor is really what she's doing, that she does not believe that the factualized trust that is located within that package is any good at all. In fact, that it is useless. And she claims that there is no guarantee whatsoever with regards to ever being able to access the funds within your TDA account. Now, I would say that based upon what is on her website, and as I have explained to you already within a couple of videos, the disclaimers that are on the website and on every single one of her videos protects her in that way, because of the fact that she makes the claim that the results are absolutely not her responsibility. They're not the responsibility of the company. They're not the responsibility of the website. Therefore, she's taking no responsibility whatsoever with regards to the results that you get. And that includes everything, including secured party creditor, including UCC1, including anything she's filled out. She's taking responsibility for none of it, folks. None of it. Okay? None of it. She's covered that at nauseum on her videos and within her website. But I do want to take a look at one thing. I would like for you guys to take a look at one thing. There, right there on her website, it sure looks like it's a step-by-step package. Matter of fact, it's called Step-by-Step to Accessing Your TDA right on the package, doesn't it? That, I would say, is somewhat deceptive because people don't read the small print. And I understand April's going to say, well, buyer beware. But see, that's part of the problem here. The claim that you're being 100% honest when in reality, I'm just picking the big things that I'm talking about right now. So, make no mistake about it. For those of you that have paid her a $450 package fee for that TDA package, apparently that package is garbage because what's actually included in it, you could very easily have gotten in the other packages that have the UCC, the SPC package, the A4V package. Why not just go with the A4V package? That package is only what, $49.95. If it's A4V package, of course, if she's claiming that you would have to be a secured party creditor in order to file the UCC1, in order to get the accepted for value to even work properly, then of course that would all have to be in that $49.95 package, right? Okay, maybe not. Maybe I misunderstood. Maybe the A4V package and the secured party creditor paperwork are two different. But then in that case, couldn't you have just paid the $49.95 plus whatever the secured party package was, which I think, or not, was it a package or was it just a piece of paper? Or just the one filing. So couldn't you have paid separately for that or paid separately for the UCC? Because I know those forms are like $9.99 each. A UCC1, it's not all that difficult to fill out. You just simply follow the lines. But if you really wanted her to do all of the work for you, it seems like if A4V is really the only thing that she is claiming really works, and that she's saying that you need to be a secured party creditor in order to file a successful UCC1 in order to get the A4V to work, which is what I heard. I don't know if everybody else heard that, but that's what I heard. Then why in the world would you start with a package that she's claiming you're never going to get the funds out of? I don't understand why the step-by-step to access your TDA package was even there. I guess it's my misunderstanding. I don't know. Maybe April will clear it up for us. But I'm thinking that that was a little bit deceptive. I would say that if factualized trust, the factualized trust being completely useless and totally mythical in nature, if that was something that she was aware of and she felt that that was something that really wasn't necessary, I don't care what advice you get from whoever. If you know that that is not something that's valuable and you have the accounting experience to be filing secured party creditor packages and UCC1 statements with the Secretary of State for everybody, I certainly would have kept it out of the package. I would have been in a position to be able to make that decision. But April says people wanted them, so, we'll go with that. Let's talk about secured party creditor, by the way. Let's talk about what it means in order to be able to file a UCC1 and what the promissory note and the security agreement have to do with that UCC1. Because, see, one of the things that didn't occur during this broadcast was April never actually answered the question that Harvey asked her. Harvey asked her this question. Okay, so you filed a UCC1. You filed to be a secured party creditor. What did that do for you? The only answer that we got out of April was, it put me on the side of being the creditor instead of the debtor. Okay, well, let me tell you what. There's a lot of groups that are secured party creditors. They're not just a creditor, they're debtors too. Every single company out there is a creditor and a debtor, both. Just so that everybody realizes that. It's funny, because I watched the video of the money boys walking through Walmart talking about, do you want to be the seller or do you want to be the buyer? Well, Walmart is both a seller and a buyer. Matter of fact, they may be even more of a buyer than they are a seller. because they're constantly giving new companies the opportunity to actually come in and try their product out. Walmart half the time is losing out on some of those new people that they let try out their products in their stores because they don't have a big enough advertisement campaign, or they don't have enough funds to, make everybody aware of their product. And so therefore, a lot of times those things go on clearance, and Walmart ends up selling them at a clearance rate, or ends up donating them. All right, so let's talk about this seriously, folks. Okay, you become a secured party creditor, and the purpose, according to April, of becoming a secured party creditor is so that you are the creditor, so that you can put your own lien on things, and this way you don't owe. Everybody owes you. Well, I'm going to give you a scenario, because this is really, in reality, how it works. If you are a person that decides that you want to purchase an automobile, let's say you want to purchase, I don't know, a brand new Nissan 350Z, okay? You go down to Nissan and you say, hey, I want to purchase this Nissan, but I don't want to put down any money. I want to go ahead and I want to finance the whole $50,000. All right, you walk in there and they run your credit and they do all their spiel, and they say, okay, fine, cool, no problem. We got you covered. We are going to send you through Bank of America, and Bank of America is going to spit out that securities agreement. They're going to give us the promissory note for you to sign, and you are covered. Here's your keys. Go ahead and go. What do you suppose the laws must be to keep you from going to the Secretary of State's office, because you're not only a person, but you're also a secured party creditor? And they have no way of knowing that unless you tell them. So what do you think would be keeping you from walking into the Secretary of State's office an hour after you drive off the lot with that brand new car, and walking in and filing a UCC on that promissory note for that vehicle? Does anybody have any ideas? There has to be a two-party agreement, and the two-party agreement must be backed up by a promissory note and a securities agreement. All right, a promissory note is backed by a security agreement. That's what's underwritten, okay? The promissory note is signed by you for the purpose of being able to collect. The agreement of security has to do with the collateral, which is the car. It is signed by the bank in order for the underwriter to tell the finance department at the dealership that they're agreeing to finance it. And as long as they have your signature on the promissory note, the bank is guaranteed you're on the hook for those funds. You can't be so blind that you believe that you would be able to take a debt that's a promissory note and somehow leave Bank of America's signature off of that promissory note and be able to write it off for yourself, claiming that the straw man is who bought the car and you are the one who owns the car. So the straw man owes you and you can zero that debt out. It doesn't work like that, folks. A two-party agreement means that is between a financial institution backed by a security agreement of collateral, whether it is through the car, the house, whatever the collateral happens to be that's there, or if it's a personal signature loan, that goes into a whole separate area. But the lien that is on collateral, that has to do specifically with there being a two-party agreement. And the two parties cannot be you and your straw man. Your DBA and you yourself as the live person and your secured party creditor status is going to do absolutely nothing to assist you with that debt. She's telling you create debts from here to Timbuktu, because once you've created them and they've floated for a period of time, you can then use this redemption remedy in order for you to get those debts relieved, whether it be through A4V or whether it be through, with your UCC1 filing or what have you. That is not the way the system works, folks. And the reason it doesn't work that way is because don't you think everybody would be going down forgiving themselves at the Secretary of State's office for their debts the minute that they got them? Yes, they would. Yes, they would. The A4V process is a scam. It doesn't work. If you've got a situation where you have a debt that's being forgiven, it's being forgiven for another reason. If you see somebody who has a debt that's been forgiven, it's been forgiven for a specific reason that you're not being told the truth about when you look at a statement like the one that was shown on her broadcast. Okay, let me give you some examples. Student loan debt, forgiven because you're a teacher giving back to the community. Bankruptcy, being forgiven because your bankruptcy's discharged those debts and it was under a Title 11. Settlement, portion of the debt is discharged because you offered to pay 70 cents on the dollar and the creditor agreed to that amount to get it off the books. Another situation where there are remedies of forgiveness like that are things like you go into court and you have a debt that is considered goes off the charts on the interest rate, and you take the lender to court like a payday loan. The judge may wipe the interest out entirely. That's called forgiven. They may even get mad enough that you don't have to pay it at all because predatory lending is illegal in some areas. Forgiven. You may have a situation where you had a parent or someone die and their debts landed on your head. But after probate, it was determined through the courts that there wasn't enough assets that you had, and that the party that passed away, that was your parent or sister or brother or whomsoever, has not enough insurance or anything left in probate that would provide remedy. So therefore that debt. So therefore they gave you the remedy by forgiving the remaining amount. These are some of the scenarios that you're dealing with when you're talking about debt discharge or debt forgiveness. A4V doesn't exist. That isn't how it works. Here is a warning that you're looking at right here. There's warnings through the IRS, and I am warning you all once again. Once again, I'm warning you all. Every time that you send an A4V presentment, as they're called, into the IRS, you get one opportunity of a letter that will explain to you that the next time that you get one, it will be included with a $5,000 fine per instance. You don't believe me? I have proof of that. There are people on YouTube right now that have already been assessed those $5,000 fines. Okay, folks, final notes on this. Some things that I noticed with regards to the chaos that was drafted up within this actual interview and phone call. Ms. LaJune claims the TDA calculator is proof. The claims you will never know what's in your name and you'll never be able to get to it. She also claimed that you could find out on the GMEI calculator. So which is it? TDA calculator is proof? We know it isn't. GMEI is proof? We know it isn't. But yet she claimed on this call that you're never going to know what's in your name and you'll never be able to get to it. Second scenario of creating chaos and confliction within what's been said. She claims she has a step-by-step to access TDA packages for $450. on her website, but then claims part of the package is completely useless, being the factualized trust. Complete bogus BS is her actual statement. And she claims you'll never get access. I can give you the time frames that these were said within the call. That one was said at 31 and 6 seconds. She claims that she agrees with Anna Van Rees on documents that she uses, but then claims no access to the TDAs. And Anna Van Rees claims that you can access them with all the different documents that she has. That statement was said at 26 and 42 seconds. At 37 minutes and 39 seconds, April claims that the TDA pack is only about the name, the moniker of the TDA, because that's what everybody was searching for. And that really she's making you a secured party creditor. But she has an additional package that's for A4V that's a lot less, and paperwork that's UCCs that you can buy singularly in the package in docs. Why would you spend $450 if she never actually was claiming that you could ever really access those accounts at all? At the end of the video, she actually points out to me, claims that you're not supposed to send an A4V in to Treasury Direct. It goes to the IRS. Well, first of all, I never said anything about sending it in to Treasury Direct. What I said was, when the IRS sends the letter back, the letter states that it's a security that you're trying to access that doesn't belong to you, generally through Treasury Direct. Now, for those people that seem to be getting confused, I'm questioning this myself. Does April realize that the United States Treasury and the IRS hold hands? And that TreasuryDirect.org is part of the Department of Treasury. So we're kind of splitting hairs there, April. I have to say, guys, after listening to the interview and how absolutely disgusting these two individuals treated one another, how unprofessional and absolutely just terrible to listen to. The disrespect, the constant cutting out, speaking over one another, these are not professionals in my opinion. Between all of the falsities and the lies and the things that have been proven, my gosh, this TDA calculator thing that she tried to bring up as proof is just sad. But this 1099-C thing that she tried to bring up as proof is downright evil. I wouldn't trust this person as far as I could throw them, and I'm really, really sorry that I have to criticize, because in all honesty, I personally feel April LaJune is irrelevant. But because it's harming other parties, I am bringing to you what I know to be fact. I'm going to link all of the different websites to the bottom of this video. I hope that you all find use to it. And let me just say to Miss LaJune that as much as I dislike your business practices, and as much as I find the way that you treated Mr. Dent, the way he treated you, and the fact that you are using deception in order to make people believe what you are doing is a good thing, that I was truly sorry to hear of your hardship back several years ago with regards to your child. From this point forward, I will not be speaking on this subject again. For those of you that have questions or want to know if something is accurate that's being said, I will leave it to you to request information from me. I am going to be moving forward with this channel in ways that really will actually help people. And one of those ways is going to be teaching you how to properly settle debts for those of you that need to do that and get your credit cleaned up. I will not be charging for this. I will not have any packages available. I never have charged for my advice. I always back it up with very solid resources that you can read for yourself. I will continue to expose scams, but I'm not going to revisit this one. Having said that, I hope everyone has a really good weekend, and I'll see you all next week. Bye-bye.